Did you know that every time you sell crypto, swap it for another token, or even spend it on a coffee, you're creating a taxable event for the IRS? Many crypto users still miss this crucial detail, leading to unexpected tax bills and potential penalties. In this video, we're diving deep into IRS Form 8949, the essential document for reporting your crypto gains and losses. We'll walk you through it column by column, so you can confidently file your crypto taxes for the 2025 tax year and avoid common mistakes that could trigger an audit. Let's get started. So, what exactly is Form 8949? Think of it as your detailed ledger for every single capital asset sale or disposal. And yes, that includes your cryptocurrency. On this form, you'll list things like when you acquired the crypto, when you sold it, how much you received, what your original cost was, and ultimately, whether you made a gain or a loss. All these individual transactions add up, and their totals flow into Schedule D of your Form 1040, which is where the IRS gets the big picture of your overall capital gains and losses for the year. It's the backbone of your crypto tax reporting. You absolutely need Form 8949 whenever you've had a capital gain or loss from selling, trading, or otherwise disposing of cryptocurrency during the tax year. This isn't just about selling for USD1. It also includes swapping one token for another, or even using crypto to buy goods or services. The IRS has made it crystal clear. Under IRS Notice 2014-21, crypto is treated as property, meaning every single disposal is a reportable event. The form itself has been explicitly updated to include digital assets since the 2022 tax year, so there's no hiding from it too. Even if you don't get a 1099-B or 1099-DA from an exchange, you're still responsible for reporting using your own transaction methods. Form 8949 has two main parts and 6 crucial checkboxes. A through F understanding these boxes is vital because they tell the IRS whether your broker reported your cost basis, and if your transaction was short-term or long-term. Getting this wrong can cause headaches. You'll file a separate Form 8949 for each box you use. So if you have transactions that fall into Box A, Box C, and Box F, you'll end up submitting 3 different Form 8949s. It's all about classifying your transactions correctly. Let's break down Part 1, which covers short-term transactions, meaning you held the crypto for 1 year or less. Box A is for covered transactions, where your exchange reported both the proceeds and your cost basis to the IRS. Your numbers should match theirs, or you'll need to explain any differences. Box B is for when the exchange reported your proceeds, but not your cost basis. This often happens with older accounts or transfers between platforms. Then there's Box C, which is super common for crypto. This is for transactions where you didn't receive any 1099-B or 1099-DA. This includes most D transactions, peer-to-peer sales, and exchanges that aren't yet reporting. Crucially, after Congress repealed the D-broker reporting rule on April 10, 2025, all DEX transactions will fall into this Box C Category 3. Now for Part 2, we're talking about long-term transactions, where you held your crypto for more than 1 year. These boxes, D, E, and F, are essentially the long-term equivalents of A, B, and C. Box D is for covered transactions where the basis was reported to the IRS. Box E is for when the basis was not reported. And Box F, like Box C, is for transactions where you didn't receive a 1,099 at all. The distinction between short-term and long-term is huge for your tax bill, as long-term capital gains often have a lower tax rate, making accurate classification critical. So how do you figure out which box to check for each transaction? For the 2025 tax year and beyond, you can use a simple decision tree form. First, ask yourself, did you receive a 1099-B or 1099-DA for this transaction? If the answer is no, then it's either Box C for short-term or Box F for long-term. If the answer is yes, then your next question is, did that 1,099 report your cost basis? If no, it's Box B for short-term or Box E for long-term. And if yes, it's Box A for short-term or Box D for long-term. Finally, consider your holding period. 1 year or less for Part 1, A, B, C, or more than 1 year for Part 2, D, E, F. This systematic approach helps ensure you pick the right box every time. Now let's get into the nitty-gritty, a column by column of Form 8949. Each row represents one crypto disposal. In column A, description of property, you'll enter the crypto name and quantity. Be specific, like 2.5 BTC or 0.75 ETH sold via swap. This helps the IRS identify the asset. Column B, date acquired, is when you originally bought or received the crypto. Use MMDDYYYY form. For faux, it's your oldest lot. If you received crypto as income, it's the date you received it. If you acquired crypto on various dates and can't specifically identify lots, you can enter various. Column C, date sold or disposed of, is straightforward. The date of sale, swap, or disposal. For D, use the block timestamp. Column D, proceeds, is the total USD you received from the sale, including the fair market value of any crypto you got in a swap. Remember, proceeds generally means the gross amount 5. Column E, cost or other basis, is what you originally paid for the crypto, including purchase fees. If it was income, your basis is its fair market value when you received it 6. This includes the purchase price in USD and transaction fees. Column F, adjustment code, is where you make corrections. W is for wash sales, which, under proposed IRS regulations, could soon apply to Crypto 7. E is for expenses not reflected in proceeds, like selling fees. B corrects incorrect basis on a 1099, and T corrects holding period classification. Finally, column G is the amount of adjustment, where you enter the dollar amount, positive for disallowed losses or negative for fees. Column H, gain or loss, is simply proceeds minus basis, plus or minus any adjustments. Manually tracking all these details for every crypto transaction can be a nightmare, especially if you're active in D or trade across multiple exchanges. This is where tools like DTax become incredibly valuable. DTax can automatically import your transactions from 22 supported blockchains, including 16 EVM chains, Bitcoin, and more. It also supports 29 CSV exchange parsers, handling complex data. Even better, DTax offers 13 different cost basis methods like faux, and specific identification, helping you choose the most tax-efficient strategy. Its 1099-D, a reconciliation center, can match broker-reported 1,099 DAs against your on-chain records, detecting discrepancies and flagging covered versus non-covered basis, which is crucial for filling out Form 8949 correctly. Check out.com. It's open source and free to start. Let's answer a few common questions. First, if I have hundreds of transactions, do I really need to list every single one? Yes, technically, each disposal should be on a separate row. However, if you have a lot of similar transactions with basis reported to the IRS, you might be able to aggregate them on Schedule D directly. But for most crypto, especially where basis isn't reported, you'll need Form 8949. Second, what if I sold crypto at a loss? You still need to report it on Form 8949. Capital losses can offset capital gains, and you can even deduct up to $3,000 of net capital losses against your ordinary income each year, carrying over any excess to future years. Finally, what about gas fees? Gas fees paid to acquire crypto are part of your cost basis. Gas fees paid to sell crypto are generally considered expenses of sale and can be an adjustment in column G using code E, reducing your gain. Navigating crypto taxes can feel overwhelming, but with a clear understanding of Form 8949, you're well equipped to report your transactions accurately. Remember, every disposal counts, and proper classification is key to avoiding issues with the IRS. Stay proactive, keep good records, and use the right tools to make your tax season smoother. Thanks for watching, and I'll see you in the next one.